The saying goes that smart people learn from their mistakes and smarter people learn from those of others. That is going to be the angle of attack of our episode today. Fair warning, this one's not going to be the most cheerful video that I made all year, but it might very well be one of the most helpful trading wake-up calls that you will ever get. I will do my best to give you my take as a trading industry veteran of almost 2 decades now, talking to you as I would a brother who would want to start on his trading journey. So let's have a seat on the porch and discuss this one. So, I stumbled upon this video the other day, and I'll be honest with you, I totally thought it was a skit in the beginning until I realized it wasn't. Many will say that this young man should be applauded for the courage to be vulnerable and admit his mistake, and that's probably the case. But especially, what I know for sure is that his real breakthrough is that he literally had an ego death, which is imperative if you want to become a successful trader. And oddly enough, it primed him for success at the very moment that he got ready to give up. Because of these contradictions, I will try to get my message across to you as real and bluntly as I can, because it needs to be. Trust me, I know it would be easy to listen to this confession, kick back and grab your popcorn, but rather, I would insist that you take heed instead. Be humble, quit the easy criticism, look inwards and reassess your own shit if trading is a life goal of yours, because I guarantee you that there will be a takeaway from it for you too. So make it count. Let's hear what he has to say.
Alright, so as you saw in the last clip, that was me mentally breaking down. So in this video, I'm gonna give you one thing that I learned over 3 years of unprofitable trading that you must know to succeed. I'll also share you my story, how I ended up in this situation, and also show you the video where I'm mentally breaking down so I could really drive the point home. So I want to start off by saying that if you're going to trade and if you want to pursue this, you have to do one thing, and that one thing that I didn't do for 3 years caused me so much pain, and that is to have rules. You need to follow rules no matter what. Follow them no matter what.
Okay, let's pause here for a second. I'm sure that most of you may have nodded when he said that you must have rules. However, after that, this assessment is actually not entirely true and might end up hurting you just as much as not having rules at all. Now, you are subscribed to a quantitative trading channel here, and you might wonder how the hell can I say that you should not have rules? Well, that is not what I'm saying. What I'm saying is that you need to wrap your mind around the difference between a necessary and a sufficient condition. You see, having rules is indeed a necessary condition to trading success, but it is nowhere near sufficient. In order to become sufficient, sticking to these rules must be applied to a strategy that carries positive expectancy. On the contrary, if you keep applying rules that express a negative expectancy, you will still lose. It might take longer than by trading recklessly, but the inevitable outcome is that you will still go bankrupt. You'll just be very methodical and disciplined in doing so. Conversely, what works is execution discipline, coupled with a positive expectancy that can be proven mathematically. Note here that I said mathematically, not statistically. Stats from a backtest are never enough, but that's a whole nother discussion that was already addressed in this video. Regardless, it is very important for you to absorb that principle. Too many rookie traders think that just being disciplined is their way to riches until they get destroyed and punished for what they made a conscious effort to implement, and they become even more disgusted until they throw in the towel altogether. So know the difference and don't let that be you, okay? Let's keep going.
And the reason for that is not to make money. The rules are not there to make money. The rules are there to protect you from doing self-harm to yourself, mentally and financially. Because you got to understand, trading is gambling.
Wrong. I'm not stepping in to argue semantics here. I'm stepping in because I know the trail of thoughts that led to it. Trading is not gambling. Trading is first and foremost risk management, which makes it informed betting. There is no risk management in gambling. You see, all gambling is betting, but not all betting is gambling. Everything you do in life, from choosing to stay home to let rush hour traffic go by before you drive to the gym, to delaying that doctor's visit because you think that your body will heal itself before it gets bad, is a bet at the end of the day. Those are all bets based on varying degrees of information. The greater your knowledge of those influencing factors of the phenomenon that that you seek to anticipate, the more you move away from gambling, and vice versa. Now here's the kicker. The fact that he says that trading is gambling is because of the hyper-relativistic view of trading success that is pushed all over social media. That is how you're being told all the time that you should interpret chart patterns, how you should leverage unquantifiable, untestable methods like trend lines and Fibonacci retracements, how you should somehow elevate your trading psychology, how you should use brute force statistics by slapping arbitrary indicators until one sticks based on random parameters that you could not even explain why some work and why some don't, etc. And I could go on and on for an hour. The point is, the common denominator of all those relativistic methods is that they are all low effort. That is what makes them appealing, but that is also what makes them stray away from what works, but demands a ton of preliminary build-up that almost no one is ready to make the sacrifice for. Therefore, it is not surprising that this young man does not believe that there is such a thing as objective, systematized, and provable solutions in trading, because he was always taught that he gets to make his own truth. And what's the outcome of this solipsistic mindset? That all trading must therefore in the end be no better than gambling. And guess what? He got destroyed for it, obviously. Next.
You're risking money to potentially make money. You're taking on risk every single day. But trading is not like any other gambling endeavor. In trading, there's freedom. There's freedom to get in when you want, get out when you want. No one's forcing you to stay in trades, right? You can trade whenever you want.
And with freedom comes a ton of responsibility. The tough part about trading is that, short of your cat landing on your keyboard, there is no blaming anyone else but yourself for your losses. And in a victimized, outcome-based society where everyone is taught that their situation is not their fault, that is just as hard on their psyche as the losses themselves.
It's not like where in blackjack you get dealt a hand, or poker you get dealt a hand and be like, okay, you get dealt a bad hand and all of a sudden you're like, okay, I don't want to play because I got dealt a bad hand. Well, in trading, you can do that. If you see you get into a trade and somehow you don't feel like it's a good trade, you can get out. No one's forcing you to stay in. It's also not like slots where you put in money and then you pull the lever and the max you could lose the amount of money you put in. In trading, you could lose your whole account on one trade, right?
Losing your account in a single trade. Think about it. Now explain to me why retail puts so much importance on win ratios when deciding whether a strategy is worth it or not. If I lost you here, please watch this video. That's all I'm gonna say.
It's the freedom. It's in the space of that freedom in trading that gives you the biggest advantage, but also the greatest disadvantage, right? If you don't have any discipline, if you don't have rules, you could really mess yourself up. And like I said, trading is gambling, and if you don't control yourself, it could turn into an addiction, right? It's only 1 degree away from turning into a gambling addiction, because that's what happened to me. And so like I said, the rules, you need to follow them, and they could be simple. They could be like, okay, I only take 3 to 5 trades a day, or I can only lose this amount of money in this day.
Hold on, watch out here. These kinds of fixed rules do not espouse the market's volatility. There is no such thing as making or losing this much per day in trading. Income is not what trading is about, and the market's volatility does not care about aligning itself with the pace of your bills or mortgage payments. There is order in randomness indeed, meaning exploitable signal out of the noise, but there is no fixed income stream that will ever match what volatility lets you have. Trading means getting comfortable with random outcomes, especially when it comes to money management. If you wish to apply a rigid plan that will intertwine both money management and risk management, then you are guaranteed to fail.
And the rules should be based on extending your time in the market. That's what the rules should be based on, is having you stay in the market long enough so that you can create a profitable strategy and then work from there. A lot of people say, oh, start with the strategy first, start with the strategy. Let me tell you this. If you don't have rules and you just follow astrology, you're not going to last long, right? And plus, the market's always changing. Strategies are always changing. Strategies, the market, you always need to adapt your strategy. That always fluctuates, right?
Here we go again. It's really insane how widespread this belief is that the market is always changing and strategies need to adapt. From total noob to regular pro, it doesn't matter. They all believe it. For example, In my previous reaction video where I was commenting on the opinion of a seemingly seasoned quant, he made the exact same erroneous point. I'm not going to digress too much here, but this belief comes from one single fatal flaw in strategy design, and that is that people don't use math. In fact, they are allergic to it. At best, they use statistics and brute force optimization, which inevitably leads to curve fitting, and once the strategy quote-unquote stops working, then they proceed to blame it on the market quote-unquote changing. No, it is not that the market changed. It is that your strategy structure never captured any edge to start with. You created a statistical artifact from the start. Look guys, I have traded the exact same strategies for years without doing more than sometimes shifting my parameters by a few degrees, if at all, and mostly just out of intellectual curiosity. That's all. The core logic of the strategies themselves are ironclad and do not change, as they should be.
It's always going to fluctuate. Sometimes one thing works in one condition, next thing you know it won't work in the other condition. It always fluctuates. The thing that's always static and should be static are your rules. So if you're a beginner trader, please follow your rules, because you're going to end up like me. And when I started trading, I got fully blown addicted to trading. And at first, it was just half my paycheck, you know?
Guys, for the love of God, don't trade your paycheck away. Paychecks are meant to pay bills and mortgages first and foremost. You may use your paycheck's leftover money to save for a trading fund if you want, but please segregate that away from anything else as money you can lose, especially when you begin. Otherwise, let's hear him describe to you how it will spiral out of control.
I could still pay my bills, and I would lose the paycheck, half my paycheck, in the stock market, and then you know, still struggle. I would struggle to eat and buy food and gas, but I would still make it through the month. So in the beginning of this year, I was not in debt. I was free, had no debt at all. And so it went from at first risking half my paycheck, and then it went beyond to spending my whole paycheck. So now I'm falling behind on bills, and I'm spending my whole paycheck, losing it in the stock market. And at that point, it felt like that was rock bottom for me. Losing my paycheck felt like rock bottom. Eventually that became normalized. You know, I would just do Uber on the weekends to pay my bills that I was falling behind, and it just became normal at that point to just lose a whole paycheck and just, you know, be okay with it. And so when that became normal, it got even worse. It went to, now I was taking out loans. I was getting in debt to fund myself in the stock market. And I'm taking out risky loans. I'm talking 80+ interest rate. You know, I was sometimes taking out a loan. I remember taking out a loan that was 400% interest rate, you know? So I think I was paying like almost half of it within a week, and just interest alone.
By the way, unpopular take here, but that is not the fault of loan sharks. That is his fault and only his. I know people love to harp on predatory lending. Well, I have news for you. Nobody forces you to take that loan. Loan sharks are merely the market responding to an existing demand, no matter how desperate and dumb it is. The reason for these insane rates is simply the price that the market attributes to offset sky-high default rates that's involved in lending to broke asses. I'm sorry if this is harsh to hear, but this is true nonetheless. Without such high rates, there wouldn't be any money to be lent to these folks in the first place. So pick your poison. At the end of the day, everything is a trade. You accept the price or you reject it. Ironically, loan sharks actually do understand the concept of expectancy by lending to those who don't. Think about that.
Yeah, I was taking out loans, and then it got even worse. I was calling friends and family for money. So it got even worse, and I was calling friends and family money. I started selling some of my stuff to pay for my debts and my bills. Long story short, okay, so long story short, I went from having no debt to now owing being $14,000 in debt. Keep in mind, I work a minimum wage in California, so that's basically almost half my yearly salary right there. $14,000. You know, I think I only make like $30,000 a year, And so that's my current situation now. And it wasn't until this most recent month that it really hit me hard. And I mean hit me really hard. I was really down bad. I actually was in the same situation 2 weeks ago. 2 weeks ago, I had enough money in my account to cover all my debt. And in that day, I lost it all. And I was so much emotional pain. I was calling mental health institutes, you know, friends and family, anyone I could call to relieve myself from the pain. I don't know if I told you this, but I also masturbate. I would masturbate every time I lose, or when I felt tense in the stock market, to kind of, you know, relax myself.
Okay, try not to have mental images here, guys, but I'll get out. I dare you.
But obviously that habit got carried over, and I would just, at that point, I was just masturbating every time I lost. And sometimes when I blew an account, I was masturbating like 20, 30 times a day, which I'm not proud of, but I had to, you know, I didn't want to feel that pain. I didn't want to sit with reality, because it was really painful to know I could have covered all my debt and I lost it all. So I remember 2 weeks ago, I was in max pain. I think I masturbated like 20 times a day. I was calling friends and family, you know, trying to seek some sort of, you know, peace in my mind, because I was so in emotional pain. And it got to the point where I was really desperate, and I was really going through it. That I don't want to say that I'm not super religious, but I was crying in tears. I'm asking God to give me one more shot, give me one more try in the stock market. Let me show you that I'm patient and that I could, you know, really go with this and not gamble. Funny enough, the day after, I got in the market again. I got a loan, and I made money. I was making money. I made money again, and I make money. The next day, I'm making money, and it got to the point where, you know, God actually gave me a second chance. He blessed me, and I had enough money to cover all my debt again. And yesterday, I lost it all.
You're not going to will yourself into profit. This game has a lot less to do with psychology than most scammers will have you believe. It has to do with strategy design and execution flawlessness, robotically, full stop, end of story. How strong you are psychologically will determine how well you can keep executing through extended drawdowns and tough patches, but it won't make you profitable. Conversely, you better believe that at worst, a weak psychology will destroy your trading of an otherwise rock-solid strategy.
You know, so it was almost like I spit in God's face. He gave me a chance. He blessed me, and I lost it all yesterday. Same scenario. I was calling up people, friends, family, anyone. I was in tears, crying, you know. I felt like I didn't deserve another chance. You know, I'm not going to cry to God again and ask for another chance. I felt like I didn't deserve a chance, right? Because, you know, I asked for him and I spit in his face. I feel like everything that's ever good that's happened to me has been God's fault, and everything that's bad that has happened has been my fault. And so that's why I'm making this video. Maybe my third chance is God's giving me a third chance, and that chance is not making money, maybe helping you avoid the pain that I went through. And hopefully you learned something from this video that could help you avoid all this and prevent you from going into this dark path that I went through these last 3 years. So hopefully you learned something. I'm gonna show you the video where I break down mentally. I was kind of hesitant to show you this video because I don't like to portray myself like this, especially in a moment where I'm at my worst. But I feel like it will really drive the point home, and you take what I say seriously, because this could happen to you. So let's watch this video. Not proud of it, but hopefully you learned something.
And I'm gonna stop here because the rest is of little educational value. And frankly, I don't think it's cool to plaster these young men's distress for shock value. And if you really insist on watching it through the end, I will put the link to the entire video in the description below. At least that will direct some traffic his way and possibly give him some revenue from it. That's the least I can do if I use his material as a prop for this video. I will conclude with one last confession for you guys. I have been in this industry for a long while now in many capacities, all of them revolving around quant positions, from analyst to portfolio manager to trader. And without spooking you unnecessarily, if trading is really what you want out of your life, it is likely going to take all of it for you to make it to a level that will be worth it and that you will be able to make a comfortable living out of. Short of that, it will be a waste of time and you will be better off investing in mutual funds and ETFs, enjoying your employer matching your 401k contributions while keeping your day-to-day craft with its regular income. I want you to understand that we're not trading from the pits anymore, and thanks to technology, the dirt low barrier to entry has made modern trading beyond extremely competitive. It is as close in fact to a winner-takes-all competition as it gets. The reality is that very few are profitable long term. I'm talking years to decades, and even fewer make hundreds of thousands from it. And most will get skinned alive and spit out, stripped out of their self-esteem and sometimes their will to live, all in a matter of weeks or months if they're lucky. It can really be tragic. This is probably not what you want to hear, but that is the reality of this field, spoken out of the mouth of a veteran who saw most of it all over the years. Make of it what you will, but if watching videos with chart drawings on the daily is what excites you and makes you dream about penthouses and Lambos, I promise you, there will be much more fun, lucrative, productive, fulfilling and cheaper endeavors in your life that you can take on and that will reward you 1,000-fold of what trading ever will. Trading is serious to a fault, borderlining with inhuman because of how it will harden your personality and reshape your natural instincts for survival. This craft only rewards the sharpest and driest to enter the game, the ones at the right tail end of the distribution with beyond insane work ethics. Hear me out, that is not just a description, that is a warning. Don't do that to yourselves. Think wisely, don't act on impulses, and especially don't put yourself in a position where you might go one step further than this guy did, only to never return. I'll talk to you in the next one.